Hello everyone, welcome to another video of the RFBT series. My name is Mark and today we are going to discuss about the Charter of the Philippine Deposit Insurance Corporation. Have you ever entered the bank and noticed a sign at the teller's desk saying that the deposits are insured by the PDIC? Well, we're going to dive into that and more in this video. With that said, let's begin. The Charter of the Philippine Deposit Insurance Corporation, otherwise known as Republic Act No. 3591, was enacted in the year 1963 and amended by later laws to improve the powers originally given to it to adjust to modern practices. For those of you who are too lazy to watch the entire video, Section 1, Paragraph 1 of the PDIC Charter summarizes the law perfectly. Section 1, Paragraph 1 states that the PDIC Charter was enacted and subsequently amended to create the Philippine Deposit Insurance Corporation, which shall insure the deposits of all banks which are entitled to the benefits of insurance under said law, and which shall have the powers hereinafter granted. Basically speaking, your deposits in the bank are insured up to a certain extent, and the PDIC shall act as the insurer that provides the insurance coverage. Now, what is the basic policy of the law? Section 1, Paragraph 2 of the PDIC Charter states that the Philippine Deposit Insurance Corporation shall promote and safeguard the interests of the depositing public by providing insurance coverage on all insured deposits and helping maintain a sound and stable banking system. What about the state policy? Section 2 of the Charter provides the following. It is hereby declared to be the policy of the state to strengthen the mandatory deposit insurance coverage system to generate, preserve, maintain faith and confidence in the country's banking system, and to protect it from illegal schemes and machinations. Towards this end, the government must extend all means and mechanisms necessary for the corporation to effectively fulfill its vital task of promoting and safeguarding the interests of the depositing public by way of providing insurance coverage on bank deposits and in helping develop a sound and stable banking system. In view of the crucial role and the nature of its functions and responsibilities, the corporation, while being a government instrumentality with corporate powers, shall enjoy fiscal and administrative autonomy. Since the PDIC is, in essence, a corporation, it is managed and led by the Board of Directors composed of the following: the Secretary of Finance, who shall be the ex officio chairman of the board; the Governor of the Bangko Sentral ng Pilipinas, who shall be an ex officio member; the President of the Corporation, who shall be appointed by the Philippine President; and 4 members of the private sector to be appointed by the Philippine President. Now, what are the qualifications of the PDIC Board of Directors? They must be of good moral character. They must be of unquestionable integrity and responsibility. They must be of known probity and patriotism. They must be of recognized competence in economics, banking and finance, law, management administration, or insurance, and they must be at least 35 years of age. The PDIC is known as the insurer of bank deposits, but they perform other functions as well. According to Attorney Sunjang Sr. and Attorney Aquino, the following are the functions of the PDIC. They are the insurer of bank deposits, they are the co-regulator of banks, and they are also the receiver and liquidator of closed banks. Now let's first discuss about the function of the PDIC as the insurer of bank deposits. What are the risks insured against? According to the PDIC website, PDIC covers only the risk of a bank closure ordered by the Monetary Board. Thus, bank losses due to theft, fire, closure by reason of strike or existence of public disorder, revolution, or civil war are not covered by the PDIC. This is because the latter enumerated events are extraordinary in nature and, if allowed to be insured against, will lead to a possible collapse in the risk-sharing scheme provided by the PDIC should the said events occur. Now let's move on over to insurable deposits. Section 5 subsection G of the PDIC's Charter states that the term deposit means the unpaid balance of money or its equivalent received by a bank in the usual course of business and for which it has given or is obliged to give credit to a commercial, checking, savings, time, or thrift account, or issued in accordance with the Bangko Sentral rules and regulations and other applicable laws, together with such other obligations of a bank which, consistent with banking usage and practices, the board shall determine and prescribe by regulation to be deposit liabilities of a bank. Now, the definition here is very long, but for simplicity of insurable deposits, let's just focus on the underlying text. Now, what if the office or branch of a bank is located outside the Philippines? Section 5 subsection G also provides that any obligation of a bank which is payable at the office of the bank located outside of the Philippines shall not be a deposit for any of the purposes of this Act or included as part of the total deposits or of insured deposits. Now do take note that the provision mentioned the word office and not branch. If the bank's office is located outside of the Philippines and the obligation is only payable in the said office, said obligation is not considered as a deposit. However, subject to the approval of the Board of Directors, any insured bank which is incorporated under the laws of the Philippines which maintains a branch outside the Philippines may elect to include for insurance its deposit obligations and payable only at such branch. So do take note the difference between the office and the branch because the law applies differently to them. Now what about those that are not considered as insurable deposits? Section 5 subsection F of the PDIC Charter lists the following: investment products such as bonds and securities, trust accounts and other similar instruments, deposit accounts or transactions which are unfunded or that are fictitious or fraudulent, deposit accounts or transactions constituting and or emanating from unsafe and unsound banking practices as determined by the PDIC in consultation with the Bangko Sentral ng Pilipinas after due notice and hearing and publication of a cease and desist order issued by the PDIC against such deposit accounts or transactions, and deposits that are determined to be proceeds of unlawful activity as defined under Republic Act No. 9160 or the Anti-Money Laundering Act. Add to this list is the one found in the PDIC website, which are safety deposit boxes. So if your bank account is considered as an insurable deposit, to what extent will it be insured? Hence, we have the term insured deposit, which should not be confused with insurable deposit. The term insured deposit means the amount due to any bona fide depositor for legitimate deposits in an insured bank, net of any obligation of the depositor to the insured bank as of the date of closure, but not to exceed 500,000 pesos. The insurance coverage is not per bank account, but per bank, regardless of which branch the account belongs. Now let's have a scenario. Christina has the following bank accounts with their corresponding amounts. BDO Branch 1 contains 300,000 pesos, BDO Branch 2 contains 400,000 pesos, BPI Branch 1 contains 250,000 pesos, and BPI Branch 2 contains 550,000 pesos. If both BDO and BPI banks were closed by the Monetary Board, how much will be the amount insured which Christina can claim from the PDIC? So what do you think is the answer to the question? The answer is, Christina can claim the following amounts from PDIC for her insured deposits: only 500,000 pesos from BDO and 500,000 pesos from BPI. The 500,000 pesos insurance coverage by PDIC is not per account but per bank. Hence, she can only claim up to 500,000 pesos from BDO and BPI respectively, despite the fact that the total amount in her bank accounts from each bank exceeded 500,000 pesos. Remember when we discussed joint accounts in the general banking law video? Joint accounts have special rules as to deposit insurance coverage as well. A joint account, regardless of whether the conjunction and or is used, shall be insured separately from any individually owned deposit account. The maximum insured deposit shall be divided into as many equal shares as there are account holders, unless a different sharing is stipulated in the document of deposit. If the account is held by a juridical person or entity jointly with one or more natural persons, the maximum insured deposit shall be presumed to belong entirely to such juridical person or entity. Now do take note that if you are the natural person in this case, you can submit proof that you have contributed to the account. If your claim will be denied by the PDIC, your proper recourse is to demand your share in the account from the juridical person. The aggregate interest of each co-owner over several joint accounts, whether owned by the same or different combinations of individuals, juridical persons, or entities, shall likewise be subject to the maximum insured deposit. So if you maintain several joint accounts with different persons, your share in these accounts will be summed together to determine the insured deposit, subject to the insurance per bank and not per account rule. Let's have another scenario. Tony has the following amounts in her bank accounts in Security Bank: 300,000 pesos in her savings account, 600,000 pesos in her joint account with Christina, 300,000 pesos in her joint account with X Corporation. Christina has the following amounts in her bank accounts in Security Bank: 300,000 pesos in her checking account, 450,000 pesos in her savings account, and 600,000 pesos in her joint account with Tony. If Security Bank would be ordered closed by the Monetary Board, how much will be the amount insured which they can claim from PDIC? So here is the answer. Tony can claim the following: 300,000 pesos from her savings account and 300,000 pesos from her joint account with Christina as her share in the joint account. Joint accounts are insured separately. However, her joint account with X Corporation is not included here as the account is presumed to belong entirely to X Corporation, the juridical person, absent proof that Tony has a lawful claim to said account. So what about Christina? Christina can claim the following: 500,000 pesos from her checking account and savings account combined, and 300,000 pesos from her joint account with Tony as her share in the joint account. The 500,000 pesos insurance coverage by PDIC is not per account but per bank, but joint accounts are insured separately. So let's talk about splitting of deposits. Splitting of deposits occur whenever a deposit account with an outstanding balance of more than 500,000 pesos maintained under the name of natural or juridical persons is broken down and transferred into two or more accounts in the names of natural or juridical persons or entities who have no beneficial ownership on transferred deposits in their names within 120 days immediately preceding or during a bank-declared bank holiday or immediately preceding a closure order issued by the Monetary Board for the purpose of availing the maximum deposit insurance coverage. It is punishable as a crime. So again, you can only claim up to 500,000 pesos as insurance coverage. If you try to abuse the system and transfer your excess to accounts of other persons with the intention of maximizing what you can claim from the deposit insurance, then you might find yourself in jail. Applying what we have learned, let's have another scenario. Christina advertised in her social media that she was selling her car for 250,000 pesos. Tony was interested in the said car and informed Christina that she would buy it. Due to the pandemic, the parties agreed that Tony would first transfer the purchase price from her bank account to Christina's bank account on the same bank. Tony's bank account contained 750,000 pesos prior to the transfer. Suppose the bank was ordered closed by the Monetary Board 1 month after Tony transferred the amount to Christina. Was there a splitting of deposit in this case? I think the answer is pretty obvious in this case. No, there was no splitting of deposit. A splitting of deposit presupposes that a depositor transfers an amount from her account to another that is owned by a person who has no beneficial ownership over the said amount for the purpose of bypassing the maximum insurance coverage of 500,000 pesos. Here, Christina has beneficial ownership over the 250,000 pesos transferred by Tony to her because it served as Tony's payment to her in exchange for Christina's car. Thus, the purpose was not to bypass the maximum insurance coverage, but merely to pay for the purchase of a car. How do you prove that you are a depositor in a closed bank? No owner or holder of any passbook, certificate of deposit, or other evidence of deposit shall be recognized as a depositor entitled to the rights under the PDIC Charter unless the passbook, certificate of deposit, or other evidence of deposit is determined by the PDIC to be an authentic document or record of the issuing bank. So when are claims filed? According to the PDIC website, claims are filed during the on-site claim settlement operations period, as announced in the notice to depositors published in national or local newspapers or posted in the bank premises and conspicuous places within the locality and in the PDIC website. Depositors who failed to file their claims during the on-site CSO period may do so through personal filing or filing through mail with the PDIC. Claims should be filed within 2 years from the PDIC's takeover of the closed bank. After the said 2 years, the right to claim for deposit insurance is barred. So what are the requirements in filing claims? Original evidence of deposits, be it the passbook, the certificate of deposits, or the like. One valid original photo-bearing ID with clear signature of the depositor or claimant. It is recommended, however, to bring an additional ID in cases of discrepancies. For minor depositors, a photocopy of PSA-issued birth certificate or duly certified copy issued by the local civil registrar and a valid ID of the parent. An original copy of the special power of attorney for claimants who are not signatories in the bank records. And finally, the claim form. Now, who are depositors that are not required to file claims anymore because the PDIC will give to them the money insured? Depositors with valid deposit accounts with balances of 100,000 pesos and below are not required to file claims provided they have no obligations with the closed bank or have not acted as co-makers of these obligations or are not spouses of the borrowers, have complete mailing address found in the bank records or have updated their addresses through the mailing address update form of the PDIC before the start of the on-site claim settlement operation, and have not maintained the account under the name of business entities. Postal money orders are sent to these depositors at their respective mailing addresses found in the bank records or indicated in the MAUF. Now let us go over to the other functions of the PDIC, starting with the function of being the co-regulator of banks. According to Section 9, Paragraph 8 of the PDIC Charter, the PDIC as a corporate body shall have the power to conduct examination of banks with prior approval of the Monetary Board, provided that no examination can be conducted within 12 months from the last examination date. Examination involves an evaluation of the current status of a bank and determines its compliance with the set standards regarding solvency, liquidity, asset valuation, operations, systems, management, and compliance with banking laws, rules, and regulations. Such a process then involves an intrusion into a bank's records. Now, the PDIC can also conduct an investigation. According to Attorney Sunjang Sr. and Attorney Aquino, Investigation is conducted based on specific findings on certain acts or omissions which are subject of a complaint or a final report of examination made by the PDIC. Investigation does not involve a general evaluation of the status of a bank. An investigation zeroes in on specific acts and omissions uncovered via an examination or which are cited in a complaint. Although it also involves a detailed evaluation, an investigation centers on specific acts and omissions and thus requires a less invasive assessment. Attorney Sunjang Sr. and Attorney Aquino further discussed in their book that an examination of banks requires prior consent of the Monetary Board, while an investigation does not. An investigation does not need consent of the Monetary Board because 1. Time is of the essence. 2. An investigation is based on the reports of an examination and such is conducted with the prior approval of the Monetary Board already. And 3. A lengthy process provides unscrupulous individuals the opportunity to cover their tracks. Finally, we now go to the function of the PDIC as the receiver and liquidator of closed banks. Section 9, subsection 9 of the PDIC Charter states that the PDIC, as a corporate body, shall have the power to act as receiver. According to Attorney Sunjang Sr. and Attorney Aquino, a receiver is appointed to manage a bank or quasi-bank for the purpose of recommending the rehabilitation or the liquidation of the said bank or quasi-bank. While indeed the PDIC may recommend rehabilitation, if it finds that the bank operations can be restored or revived, it cannot recommend rehabilitation if the bank was ordered closed by the Monetary Board, even if the revival of said bank is possible. According to Section 12 of the PDIC Charter, whenever a bank is ordered closed by the Monetary Board, the PDIC shall be designated as receiver and it shall proceed with the takeover and liquidation of the closed bank in accordance with its charter. For this purpose, banks closed by the Monetary Board shall no longer be rehabilitated. What are the powers of the PDIC as receiver? The PDIC as receiver shall control, manage, and administer the affairs of the closed bank. Banks closed by the Monetary Board shall no longer be rehabilitated. The powers of the PDIC as receiver includes the power to collect loans and other claims of the closed bank, and for the purpose, modify, compromise, or restructure the terms and conditions of such loans or claims as may be deemed advantageous to the interests of the creditors and claimants of the closed bank. The liability of the banks for deposits and all other obligations as of closure shall cease upon closure by the Monetary Board. So that ends our lecture for the Charter of the Philippine Deposit Insurance Corporation. Below is a list of my sources if you want to check them out. Special thanks again to Charles Nova for the digital art, and thank you for watching and listening. I hope to see you all again in the next video. But for now, this is goodbye.